Welcome back. It's time now for a business roundup, and Owen's here. Hello again, Owen. Today we're also joined by Graham Bishop. Good morning to you. You're one of the UK's foremost European finance experts. We'll be coming to you in just a moment. First, though, an update on some of the Asian markets and the numbers.
Yeah, the Nikkei's just closed just before we got on air, Claire, closing around 1% in the green. Coming back off some of the highs of the day's session, but nevertheless a reasonable day's trade. The Hang Seng and the Shanghai Composite, and indeed the Kospi, showing some losses as well, particularly the Hang Seng losing some of the day's gains. But nevertheless, not really the picture of a market that's quaking in the face of a French downgrade. Just worth noting as well, Apple, its share price up to $424. That is a new record for a company that seemingly cannot stop in its dominance of the the world technology market right now.
So for now, markets seem unfazed about the latest twist in the Eurozone crisis, and yet Greece is right back on the agenda. Stalled negotiations between the government and private investors are due to resume today. Hedge funds who've bought up Greek debt to make short-term gains are holding out on a deal to write off significant portions of their investments. And without their agreement, Greece could be weeks away from a full-blown default.
Anger on the streets. Thousands turned out to demonstrate against government austerity measures in Athens. The protest comes as cash-strapped Greece negotiates with international creditors over a deal to cut its debt in half. The Greek government wants to swap out maturing debt for new lower-yielding bonds and a small cash payment. The stumbling block has been the interest rate offered on the new bonds, which could take investor losses well over the 50% originally discussed in the voluntary write-down. Without a debt swap deal, the EU, IMF, and European Central Bank, known as the Troika, won't release the next tranche of bailout funds. Money that is desperately needed to pay 14.5 billion euros worth of bonds coming due on March 20th.
The next installment, in many ways, it's a mega installment. It's a do or die installment. So in many ways, this is a very crucial talks, which will encompass not only the progress that Greece has made with the various reforms and objectives, but also its ability to fulfill the deficit targets.
Without the 130 billion euro aid package, the country risks going bankrupt, triggering a messy default and perhaps exiting the Eurozone.
Okay, that's the picture in Greece. Let's bring in our guest here, Graham Bishop. Good morning again
Morning.
to you, Graham. Graham is one of the, as Claire was saying, one of the UK's foremost authorities on European finance. In fact, you've been advising governments around the Eurozone far longer than I've been talking about business, that's for sure. Let's just get your take, first of all, Graham, on this situation in Greece. It seems, and we get a sense of deja vu with this in the run-up to these EU summits. We get these tense negotiations, and yet now the screw is really being turned by those private investors. Yes, and
there is a difference here between the banks who originally lent the money and some of the vulture funds that they've sold the securities, the bonds to. You would expect everyone to play hardball. After all, if you're running the risk of losing half your money, or is it 60%, you'll try hard to only make it half. But the morality of some of these vulture funds trying to push companies over the brink, another question.
Are you saying that because many of these hedge funds and, as you say, vulture funds have been investing in Greece since the terms of that second bailout were agreed, and are really basically betting on this country going to the wall?
There's been an amount of that. But of course, if it does go to the wall completely, then they don't get anything, or next to nothing. So how far do you push this brinkmanship? A big problem, but we will see more in the weeks ahead, I'm sure. As the deadline looms, that will concentrate minds, but we won't get a quick decision, I suspect.
Do you get a sense then that private creditors have the upper hand here? EU leaders haven't been very vocal lately.
Well, private creditors, in the end, are the people of Europe, the savers who've invested their retirement income, retirement assets in pension funds and life insurance and mutual funds. All these investors are the agents of those people. And as they look at what the European governments have been promising during my career, debt levels have tripled. And the governments have always said, we'll stop it, we'll bring it down, and they never have. And so, naturally enough, the savers, the people, are getting very nervous. And they're the people who actually lend the money.
What's your general feeling here, Graham? We heard Standard & Poor's saying earlier on the week that Greece will now default. All of these rating agencies have basically broken cover and are saying this is a dead certainty. We've got a massive bond redemption in March, around 14 billion euros of debt maturing. Is this simply too big an amount for this country to cope with right now?
Well, when you say default, we're into technical terminology. If you make an agreement, yes, it's called voluntary, and that therefore doesn't count as a normal default. But is it really voluntary? How much pressure is being applied? So we're into semantics. The fact is that the private sector has agreed to take a write-down of approximately 50%. So that is settled. Is that called a default? The lawyers can debate.
Well, just broadening the discussion a little bit, you're here in Paris, you'll be heading off to the Finance Ministry a little bit later. You're there to talk about a new, relatively new idea, short-term bonds, basically, for the whole of the Eurozone.
Yes, a group that I participate in, the European League for Economic Cooperation, we've developed an idea, instead of having a Euro bond, which is a long-dated thing, but just have a fund which pools all the short-term borrowings of the Eurozone countries other than those in receipt of aid. And therefore there is only one vehicle which banks can buy and rediscount at the ECB, insurance companies and so on. And that would have a much lower interest rate, probably 2% or maybe even less now. And so in Italy or Spain can refinance for a couple of years, which gives them the breathing space. And that's the critical thing. The policies have been put in place. We need to see the results. So get a breathing space for a couple of years. And this fund could provide that.
And yeah, are they going to be willing to do that? EU leaders, for example, and they're finding it difficult to agree on the whole concept of Eurobonds, the whole concept of greater fiscal harmonisation. This just seems to be yet another idea.
Well, it is
to fall out about.
But, well, not to fall out about, I hope. A lot has already been agreed on fiscal coherence, fiscal improvement. And what has been agreed is completely misunderstood or failed to be appreciated by the markets. We have the treaty, the new proposed treaty. But this is just part and parcel of the process. Once you've agreed that, once countries like Italy, with the new Prime Minister Monti, the good work that he's doing, once they've agreed to do that, here is a practical, simple, short-term, not a complex bit of financial engineering and financial leverage, terribly simple. And you can do it very quickly and easily.
What about the long term then?
In the long term, if Italy, Spain, etc., put forward and implement the policies which are being proposed now and actually about to be legislated in Italy, then I feel very confident that things will turn out all right. But we've got to get to the long term.
You mentioned, of course, Italy. They're essentially asking for some debt relief earlier in the week when Monti went to Germany and held talks with the Chancellor, asking for some sort of relaxation. Is that the sort of thing you've got in mind with these short-term bonds, that essentially you're giving Italy essentially a little bit of debt relief?
Well, I would be hesitant about using the term debt relief. That has other connotations. But a short period of lower interest rates, ones which are closer to that which Germany pays, and which reflect the agreements already reached and their commitment to reform their public finances, reform their economy. The anti-competitive measures which, or the pro-competitive measures which Prime Minister Monti is putting, very powerful things. It needs time. Just got to wait for that to come through.
OK, Graham, I'm being told we've got to leave it there. We've run out of time. Many thanks indeed, Graham Bishop.
Thank you, Graham, and thank you, Owen. That's it from me. Do stay tuned to France 24. All the latest headlines coming up in just a few minutes.
Watch all of France 24 on france24.com. It now features more content and is quicker and easier to use. 24 hours a day, wherever you are, visit our website and catch up on all the latest news. Watch the channel in high definition. Pause live TV and watch programs from the past 24 hours at the click of a button. Find our reports, programs and web documentaries in seconds. All of France 24 in French, English and Arabic on france24.com.
We've come down to the farm for the latest health programme, following the food chain from the field to what ends up in your plate. And that's to investigate the health impact of eating genetically modified food. Join us on Health.
Don't miss Health today, 10:15 a.m. Paris time on France 24.